I was recently having a conversation with a real estate sponsor, and we were talking about the difference between 506B and 506Cs. And they're asking me my opinion on which one of these structures is preferable. So I wanted to discuss the differences real quick and give you my perspective on which one is better and where the industry is headed. So for those of you who don't know, the SEC either requires you to register any sale of a security with them, or you have to have an exemption. And one of the exemptions to registering with the SEC is either the 506B or the 506C. At least those are the most common in the real estate sector. Now, the reason that you want to have an exemption is that the amount of admin that goes along with the disclosures you have to make to all of your investors if you, quote, register with the SEC is extremely burdensome and makes most real estate investments not economically viable. So you should go through one of these exemptions. And like I mentioned, those most popular ones are the 506B and the 506C. Now, the main difference with the 506B and the 506C is the 506B allows for your investors to go through a self-accreditation. So what this means is that the only thing that they have to do to verify that they're accredited is basically to say that they are. Now, the other caveat with that is that in order for that to be meaningful, the SEC requires that you have prior knowledge of them being accredited, basically. They want to have a confirmation that you have a pre-existing and substantial relationship so that if they say they're accredited, you at least have some reason to believe that they are because you guys have known each other for a little bit and had a couple of conversations about investing. Now, another benefit of the 506B is that it does allow up to 35 non-accredited, sophisticated investors. These are people that have some general knowledge of investing. They have some experience investing. They're not just completely have no idea what they're getting into, but they also aren't necessarily accredited investors. And for those of you who don't know, accredited investors, individual people that are accredited, they have $1 million of net worth, not including their primary residence, or they've made $200,000 a year for the last 2 years, or $300,000 a year between both them and their spouse. So, long story short, the real challenge with the 506B is that you have to have that pre-existing relationship prior to giving them a specific deal. So you can go online and advertise, hey, you have a company, but you can't specifically advertise that you have a specific deal. And the SEC, there's a lot of gray area in which constitutes a pre-existing substantial relationship. So a lot of companies out there, they have a cooling off period or a waiting period in between the time that you first sign up for the website and then actually receive the first deal. Most companies think this waiting off period should be somewhere between 21 and 30 days, during which there's usually at least 2 points of contact. So a lot of the industry leaders out there that use the 506B structure will have you go to the website, sign up for an account. They give you a call pretty much immediately, talk about your background in the business, talk about your experience investing. They may even do a follow-up call during that 21 or 30-day period. And then after the 30 days, you get access to your first deal. This is reasonable. This is something that I've done many, many times. However, we as a company have transitioned over to doing exclusively 506Cs for a variety of reasons. So with the 506C structure, the main benefit is that you can advertise immediately. You do not have to wait the 21 or 30 days. You don't have to prove that you have a pre-existing substantial relationship. And the reason you don't have to do that is because instead of letting investors do the self-accreditation process, the 506Cs require a third-party verification. Now, what this means is that they have a third party, either a CPA, attorney, or a broker-dealer, verify their status as an accredited investor. So you can give your financial documents to your CPA, you can give your financial documents to your attorney, or your broker-dealer, maybe E-Trade, for example. They already have your financial information. They can sign a document saying that you're accredited and send it to the sponsor that's providing the investment. Now, going through this third-party accreditation process is a little bit challenging administratively, and the market knows this. And because the crowdfunding space is getting larger and larger, there's service providers out there that provide this service. So the one that we integrated with is verifyinvestor.com. This is a program that has crowdsourced attorneys all over the country, basically, so that anytime during the workday, you can go through the verification process very quickly because there's always an attorney that's there all over the country that's waiting to basically sign one of these forms, as long as they can review their information beforehand. This is actually our preferred model for a variety of reasons. As an issuer of a security, we want to be sure that our paperwork is really lined up well. And I think the best way to make it line up is that we have this third-party verification verify that this investor is accredited prior to them being allowed into our offering. Now, one of the drawbacks is that the 506C does not allow for any non-accredited investors to invest in your offering. If you use a 506C, every single investor has to be accredited. And so that's one of the drawbacks. You have friends and family that you're always trying to help out. Well, the 506B model might be better for you. But I really like the extra level of scrutiny it requires, the extra level of protection for the issuer of the security. And plus, it allows me to say pretty much whatever I want on my podcast. So for example, we currently have a fund available, and you can go to asimcapital.com and check it out. Now, if we were doing a 506B structure, then that last statement might be kind of borderline in terms of what I should be saying on the program, because the 506B is not supposed to be a public solicitation. The 506C can be. So I know that was a lot of information. Hopefully it's useful. I'm a huge proponent of the 506C structure, and I think that's where the industry is heading because these service providers like VerifyInvestor.com are making that third-party verification process a lot easier. All right. Hope you have a good day. All right, listeners, you know the routine. This show is all about learning, making wise investments, and protecting and growing your capital. So if you're interested in these topics, make sure to hit the subscribe button. Of course, if you've already enjoyed a couple of great episodes, don't be shy. Leave a review. It really helps the show's visibility. And lastly, if you're an accredited investor and you're interested in learning more about our investment opportunities, the types of deals that I personally invest in, go to asimcapital.com. That's ASYMcapital.com. Thanks a lot.